I want to bring in Kevin O'Leary right now for reaction on the Fed. Okay, so we got that quarter-point rate cut. What was your reaction?
It was so highly anticipated, I didn't expect much other than we were going to get 25 basis points. But here's the issue. If you look at the whole data set today, the two big surprises. One, how strong the consumer remains, up at that 3% growth, and also the 3% decline in CapEx spending with business. So these are offsetting, but yesterday we were at 90% we'll get another Fed cut. I'm not sure now. I think the Fed may pause for a while. Things are not as bad as everybody had anticipated and not slowing as much as everybody thought. We look great on GDP that we're going to kind of hang in at that 2.8, 2.93%. And so the Fed has to be looking at this saying, I think we'll take a rest. So and the market is at peace with that at this point.
Back near record highs.
Yep. I've looked. It's been, what's been so resilient are two aspects. Number one, the consumer remains the strong pivot of job creation in America, unemployment under 4%, and continuing to spend on a healthy basis. And yet, we're being thrown that bone on trade. We're being thrown that vision of maybe getting a deal over the next few years because we've got this stage one maybe coming on the 17th. I know it's a tertiary deal, it's mostly financials, it's not really IP and it's not really access to their markets, but it's better than nothing, and the market is willing to wait for the rest of that.
And when you look at stocks compared to interest rates, I mean, we've got the 10-year yield now at 1.8. The last time the market was at a record high in late July, it was at 2%. So just that difference could be a bullish sign for stocks.
So I called around a few desks after all the data poured out in the morning and said, has anybody changed their mind about commitment to equities? Is there anything better to invest in right now for the next 12 months? Is there any strategy would have you go to cash? What has changed on this data set that would make you not want to stay long going into the back end of the year? There is nothing changed. You'd still rather be in equities, you'd still rather get those dividends. They're far better than going long duration on corporates or on govies. So I think we're in the pause that refreshes, but near the highs. What's wrong with that?
So how would you be positioning your investments? Because I remember the end of last year, we were talking about how high-quality dividend stocks were in vogue. Maybe tech had fallen out of favor, but maybe that's reversed now almost a year later.
It's interesting. Both have worked, because if you were willing to take the volatility provided by the high PE techs, you're back where you started. You've just had a bit of a ride. But I have stayed, my core asset holdings remain my own index, OUSA, because I own about 138 of the S&P 500 that have the highest quality balance sheets. That's a safe place for me to live. I don't tell people how to invest, that's what I do, because I want that 2.8, 2.9% div yield I get. But I also use OGIG, which is a huge basket of global internet players that include all the FANG stocks, and they're back up near their highs again. People want growth, but they don't want just domestic FANGs, they want international growth. And I'll tell you, the most interesting stocks that I think are in the market today are those Chinese internet giants with a hint of a trade deal, because they got slaughtered into the whole trade war stuff. They got pushed down to the lowest values they've been in a long time, and now they're coming back up with the idea that maybe we're going to get a trade deal. So we have a lot of cross currents coming from the political agenda, including our own domestic companies, but the market is waiting to see what happens next on trade.
Regulation risk when it comes to big tech. In the final 60 seconds, how do you calculate that when you're valuing some of these tech companies?
I'm getting unhappy with the idea that a politician knows how to break up a Google, an Amazon, or a Facebook. And I want to remind everybody that one narrative that has not come into the fore is Facebook and these other digital platforms are job creators in America. They create millions of jobs. My small companies would not exist without Facebook, without Instagram, without WhatsApp, without Messenger. We need these tools to acquire customers. The last thing I want is some politician telling me how to design the product. Let the market design the product. Let the market decide what they want to spend on a Google or on a Facebook. Let us do it in a way that keeps the government out of these businesses. We don't need to break them up. That's a huge mistake. We're going to look like Europe soon. No tech companies. You want to look like France? There's no France book. If you want to do business in France, you use Facebook. Where'd that come from? America, because we have an environment to create great companies like that. Well, the last thing we need is some politician trying to use these platforms to get votes in an election cycle. I'm fighting back.
Although just quickly, I mean, take Amazon, for example. Do you really need Amazon Retail and Amazon Web Services under the same umbrella? I mean, would it unlock value for shareholders if you broke up some of these companies?
But the point is, IBM in the mid-'80s, I use this example all the time, was a giant, was the #1 market cap company in the world. It blew itself up. It didn't need a politician to do that. It's a shadow of itself because it missed the market. The market's changing all the time in tech. 40% of the sales of my companies come from Amazon. I do not want that platform broken up. It's working just fine. I don't need a politician to tell me how to design an American story when it's a business. Let them do their political thing and stay the hell out of this. It's working. We're creating American jobs. Stop messing with it, is my message as an investor and an entrepreneur and an operator and a supporter of tens of thousands of young people creating companies and jobs. We don't need those words. Hi, I'm from the government and I'm here to help you.
All right, Kevin O'Leary, we will leave it there. Thank you so much, as always. All right, we'll send it back to you, Akiko, in the studio.
Okay, thanks so much for that, Scott, and our thanks to Kevin O'Leary as well.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.